these signs that the housing industry is seriously slowing are also signs of the next recession. We are seeing mortgage applications declining. As I reported yesterday, we are also seeing new home builders confidence dropping, considerably. Mortgage demand fell more than 6% last week compared to the previous week, hitting the lowest level since 2000, according to the Mortgage Bankers Association's seasonally adjusted index. Economists, and frankly just plain logic, are blaming these problems on the changes in interest rates and also the fear of a recession. The fear of buying a home is rising. Average Americans are simply afraid to buy a home, thinking that the value of the home will decline shortly after they buy it. The interest rates of homes are also scaring buyers. I know, to me it's almost comical that buyers think that 5 and 6% interest rates are high. It's not. These rates are low, and people need to understand that 2, 3, and 4% interest rates were an anomaly and will probably not happen again, at least in my lifetime. If you have a rate under 5, consider yourself lucky. If you're ready to buy a home and you need to understand that a home is a place to live, and interest rates should not be a determining factor. Demand for refinances, which are highly rate sensitive, fell 4% for the week and were 80% lower than the same week last year. Wow. I wonder about those mortgage brokers. They must be starving. Those applications are also a 22-year low. Banks will probably be promoting deals, but they're going to be stuck in the rates that they must charge. I wouldn't be surprised if we start seeing banks promoting free appraisals if the loan gets approved. Many mortgage loan officers, like real estate agents, are going to be in for a rude awakening when they realize that it isn't the past 2 years anymore. House selling is slowing, but the reality is there is still low inventory. The low inventory is the only thing holding prices together. If we got a sudden flood of homes for sale, because people can't afford them any longer, the market is going to change fast. The increase in Fed interest rates is going to be announced next week, and it will certainly cause a shockwave to the industry. We have also seen the European Central Bank reporting their news and their policy today, which will also affect this market trend. I forgot to mention, by the way, that sales of previously owned homes in June fell 5.5% in May, according to a monthly report from the National Association of Realtors. This was also the slowest sales pace since the same month in 2020, when sales dropped briefly at the start of the COVID pandemic. Outside of that, though, it's the slowest pace since January 2019 and below the annual 2019 total pre-pandemic. So it's starting to get normal. The median price of an existing home sold in June is set another record, which is $416,000, which is an increase of 13.5% year over year. It still amazes me that home prices can rise while inventory is creeping up. Mortgage rates are rising and less buyers are buying. I really believe that the data we are reading has got to be lagging. By the end of the year, it's going to be a very different story. By next spring, we will definitely feel the change, so hunker down in the home you have and hunker down in your investment properties. For those who can ride the next 7 or 8 years, if you can ride it out, you're going to be very happy. Bottom line, yep, housing sales are slowing, but if you want a home, go buy it before you really can.